back, YouTube. Today I want to talk about how I use Heikin-Ashi candles to read price action. Nothing complicated, it's fairly simple. I pretty much break down price action into three different categories. First category is going to be market direction. Number two is market structure. Number three is market execution. Now, once we get to the execution time frame, I pretty much switch from Heikin-Ashi to standard or regular candles. And at the end of this video, I want to show you guys a trade breakdown of US 30, which I actually took last week. And this is pretty much me using the exact same process. All right, so let's get into it.
All right, now we have the charts up. The first thing you want to do in between indicators and the time frames, you want to change your candlestick type to Heikin-Ashi. Now, at the start of every single trading week, I go straight to the weekly time frame. And on this time frame, I'm just pretty much looking for a directional bias based on the most recent pivot. So let me show you what I mean. If we started right here, pretend like this down here doesn't exist yet, and we come back up here, and let's say this pivot already happened. Because the way I look for pivots is when price goes in a different direction from the last or the highest or the lowest candle closure. So when price went beyond this candle closure and then closed below, now my bias for the entire week has changed. I'm looking for shorts, nothing else. And vice versa. Once price comes here and let's say a couple of weeks later, price closes above this body, I'm only looking for long positions. So since we see this pivot, we'll go ahead and draw a line right here. That'll be our weekly. And we see another pivot here. That'll be our weekly. All right. So for the sake of structure, that's when I'll go down to the lower time frames. And for this example, I'll use a daily time frame because that's where the market structure starts to become clear inside the overall direction. So let me go find our pivot. All right. Now, on this time frame, this is where I focus more on price behavior. I use the Heikin-Ashi candles first to define structure because they filter out the noise and make pullbacks, continuations, and momentum shifts so much easier to read. And I'll show you what I mean. So we already see that this was our weekly pivot. Now, the concept is similar, but instead of using only candles or single candles for the pivot, we're actually now looking for structure. So I look for structure breaks and pullbacks based on what happened first. So in this example, this was the last low before we got to this weekly pivot point. So this would be my first change of character. Now let's just grab that for now. All right, now I don't look at pullbacks like everybody else. Some teachers or schools of thought will say, hey, once you apply the Fibonacci tool, a deep retracement or a valid retracement starts when you hit the 38.2. Not for me. When it comes to Heikin-Ashi, you got to remember average price. It's average movement of price. It's not direct candles. So what you see on the Heikin-Ashi may be slightly different from the standard chart. So that's why I don't look at that. As soon as I see, I'll zoom in for you. As soon as I see price come back above, that's a valid pullback for me because that could be a continuation. Because if you're dealing with instruments that are highly momentous, instruments or pairs like gold, the Russell, NASDAQ, US 30, you're not always going to see pullbacks that come way back into retracement. Sometimes it'll dance around the last support and resistance line, or you may see a quick rejection after the first pullback. You never know. So this is why when I use Heikin-Ashi, I simply follow price for structure. That is it. Because this is not an execution time frame. This is just to see price behavior. So let's continue. So after I see the body close above this, this becomes my low. And a new low doesn't get formed until the actual body of the closure passes the last support and resistance level, whether we're bearish or bullish. So let's keep going. This will be our next pullback here. So this will be our new low all the way across. Same thing. This is our first pullback. This is our low all the way across. Now we see this pivot, but in the event that we don't see that, we are always checking on the weekly time frame to see if we get a pivot, because there are times where price is making lower lows and lower highs, but price eventually starts to turn around, but you would never know that. So if we go back to the weekly time frame and you start looking at all of the weekly candles, you can clearly see that we never passed, or they never came back above. It may have retested, but it never passed or closed above all of these candles. So let's go back to the daily and take a look. When did structure pass any of these levels, these weekly candle levels? This is why my bias remains the same until that weekly candle gets violated. All right, so let me kind of clean this up. Because a lot of people can get lost messing around with different time frames, so I have everything always marked out. So same thing, we see our pivot here. Now, the idea flips. So we start here from the bottom. Which happens first? Did the pivot happen here first, or did it happen here first? It happened here first. So that was our valid pullback. Let me zoom in so you can see clearly. This candle was our highest, and this is our first pullback. So this is our new high. Let's just use for our structure level. Same thing here. New high. New high. Here's a body. Nice little pivot. Here's our new high. And then here a low was taken out. Now once you see this in a bullish bias, that's when I will turn back to the weekly. Now we can see on the weekly, when it comes to average price, price only swept that previous candle. So my idea is still looking for longs. So this will be our weekly. And if we go back down to the daily, you can only see that this was a minor sweep. And then price continued in the upwards direction. Same rules apply. This was our valid pullback. The price never closed right here, so that's not a new structure shift. So you continue the same process. So this high was broken. That's our valid pullback. That's our new high. And same thing here. If this is our high, this was the low that took out this high. And there's our shift. And what did I say previously? Once you see structure going against the actual bias, 9 times out of 10 it's time for a flip. So you go to the weekly and you see our bias changed. That's a huge violation. So it's good to get in the habit of using multiple pairs and seeing which time frames work best for you. For example, if you want to execute on the 5-minute, I recommend looking for structure on the 1 hour. If you're looking for 15-minute entries, I recommend your structure be on the 4 hour. So let me break it down and make it simple. All right. Daily structure equals 1 hour entries. 4 hour structure is equivalent to 15-minute entries, and 1 hour structure is equivalent to the 5-minute entries. All right, now I'm going to show you the real trade that I took on US 30 using the exact same model. All right, so here's the Dow or US 30. So I took the trade, I believe, on the 19th, but like I explained in the previous section, the rules are the exact same. So if we're already here, we're going and referencing our previous pivot. So that's way down here. All right. So then you go to the daily. And this is our most or first change of character. I'll just use that. This is our valid pullback. All the way down here. And literally when I'm on this time frame, when I'm starting to look for longs after we have our directional bias, I'm waiting on price to pull back. And then as soon as the next candle or the next set of candles break above the high again, that's when I'm gonna start looking for longs. So I would have started looking for longs here. And what day was this? May 4th and May 5th. Even though these are bearish candles, they're still within this overall range of this candle here. So there's no pivot point yet. So I'm effectively still looking for longs. But to skip forward to some time, this is where I see the first valid pullback here. As a matter of fact, let me just remove all these candles here, just so you can see what I mean. So even though that was such a shallow pullback, it's still a pullback nonetheless. So from this pivot is when I start to go look for my structural time frame before entry. And it's the same rules apply. Where did the first pivot point happen, or the first change of character? So that's not a valid pullback because this green candle never passed the lowest body of the candle right here. So I would have need to see, or price would have needed to show breaking above this level right here. So that's not valid. So from this lowest point, it would be here. One hour structure. Now, I'm considered an intraday swing trader, and there are some times where I get into scalping, but my bread and butter is intraday. So that means I will enter anywhere between the 15 and the 1 hour time frame. So after this happened, price broke above and made a new high after the first change of character, after we got our daily pivot right here. So we start analyzing further. And around this time, 8 p.m., I'm not trading, but I am still looking at the market to keep structure intact. So if we scale in here, we can see that this bearish candle did not close below. It might have touched it, but it did not close. So that's not a pullback for me. Right here, as soon as price went above here, our first pullback was here. And this is exactly why I have this pullback line created specifically for myself. And let me back this up even further. So as soon as I got this pullback, if you remember what I said in the beginning part of the video, I do not enter on Heikin-Ashi candles. Absolutely not. When I'm on my entry time frame, or if I see a good setup, I switch back to standard or regular candles. Now, obviously, when you are trading on the higher time frames, fundamentals, news, high impact news is still very, very important, but they don't impact or have a great enough impact like it does on the lower time frames. Like when FOMC comes out, CPI, the core price index, or non-farm payroll, you need to be extremely careful, because on lower time frames, this is actually why I stayed away from it, it's too volatile. Your directional bias could be intact, but you still might get shaken out. So this is the prime example, or the prime reason why I very selectively go down to the scalping time frames, like anything below the 15-minute time frame. So anyways, let's continue. Before I enter, I have different confluences. The first confluence is always going to be my moving average. That's one. I need at least 2 or 3 confluences. So what I'm seeing now, let me back up. I'm showing rejection from the support now turned into resistance level, and I'm showing a bounce from both of the moving averages, and now we have a huge bullish candle setup. This is a bullish engulfing with huge rejection at the bottom, and it's tapping all of our confluences. So literally, I put a block right here at the body of this bearish candle, and as soon as this went above, I entered. So let's do a long, and I literally put my stop like right at the tail of that bullish candle. And me going from a scalper to more of an intraday swing trader, I had to learn patience, because to be honest, I held this trade for a couple of days. So as soon as I made this entry, it's definitely around New York session, 9 o'clock, an hour after market news, and I just let it ride. And the only reason why I closed like right before it continued to go up, because it still went up. I closed because Friday closed. I'm not trying to risk holding my trades over the weekend, because in my personal experience, there have been a few times where I tried to hold over the weekend, and as soon as market opens Sunday, I'm talking about gaps going against me that you would not believe. So right before New York closed, a couple of hours on Friday, I just took my profits, which is where I got the 3.75, but price continued to push up even more. But that's about it. Good luck on the charts. I'll see you on the next one.